I would say communication skills are the first area I would work on to enhance your value throughout life. Because if you can't talk to people, you'll have a real problem selling anything, stocks, or anything else. Warren Buffett is well known for being a giving philanthropist and astute businessman. He routinely ranks well on Forbes' list of billionaires, making him one of the richest persons in the world. Welcome to Enterprise Epics, where we delve deeply into the wealthiest and most powerful people in the world's success tactics. We will be looking more closely at the renowned businessman and investor, Warren Buffett. Buffett is considered one of the best investors ever due to his extraordinary fortune and long-term investment techniques. However, what are the hidden meanings of his wealth? Let's investigate. Early life and education. Born in Omaha, Nebraska in 1930, Warren Buffett had an early interest in business and investing. At 11 years old, he started reading investment books. By the time he was a high school student, he was delivering newspapers and selling golf balls. Buffett continued his education by attending the University of Pennsylvania before transferring to the University of Nebraska, where he earned a business administration degree. Following his graduation, Buffett studied under renowned investor Benjamin Graham at Columbia Business School, where he gained an understanding of the principles of value investing. Early career and investments. Buffett started his investment career as an employee of his father's brokerage firm, but he didn't start to establish himself until he formed his partnership in the 1950s. Graham's teachings had a big impact on Buffett's investing strategy, which emphasized purchasing cheap stocks and keeping them for the long run. Buffett became one of the richest persons in the world by making several profitable investments in businesses over the years, including Coca-Cola, American Express, and Geico. Buffett started in the early 1950s as an investment salesman, and in 1956, he established Buffett Associates. The Berkshire era. The foundation of Buffett's investment empire, Berkshire Hathaway, was formed in 1965 when he combined his firms into one organization. Berkshire Hathaway transformed from a financially troubled textile company to a global conglomerate with holdings in retail, utilities, and insurance under Buffett's direction. Buffett's methodical approach to investing, which focuses on businesses with significant competitive advantages and long-term growth prospects, is largely responsible for his success with Berkshire. Buffett has a reputation for being patient and having a long-term outlook. He frequently holds on to his investments for decades at a time, enjoying the compound interest benefits. Value investing principles. Value investing is a fundamental component of Buffett's investment approach. It entails purchasing businesses that the market has undervalued and hanging on to them for the long run. Buffett seeks out businesses that have a competitive edge over their rivals, good management teams, and sound fundamentals. He also keeps a careful eye on the price he pays for stocks, deciding to purchase them when the market is down and prices are low. Buffett was known to say, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." "Just keep buying," he said in a CNBC interview. "American business is going to do fine over time, so you know the investment universe is going to do very well." Importance of patience and discipline. As an investor, Buffett's discipline and patience have been crucial to his success. Buffett is renowned for his capacity to maintain composure and reason in the face of market turbulence, tuning out transient noise and concentrating on the long-term potential of his holdings. The stock market is designed to transfer money from the active to the patient, as Buffett famously stated, highlighting the significance of sticking with a plan and avoiding being influenced by market sentiment. Buffett has been able to weather market downturns and come out stronger on the other side thanks to his discipline and consistency. Buffett's methodology. In his 6-step investing process, Warren Buffett assesses a company's debt, profit margins, performance, and public trading status. In order to examine past performance, he looks at return on equity, ROE, which shows the rate at which shareholders make income on their shares and takes the last 5 to 10 years into account. He also takes into account the debt-to-equity (DE) ratio, which indicates the percentage of debt and equity used to finance assets. A high ratio suggests that the company is funding itself with greater debt, which could lead to erratic profitability and expensive interest costs. Profit margins are essential to a business's profitability because they show how well it manages costs and operates efficiently. Buffett usually takes into account businesses that have been around for at least 10 years. He only makes investments in firms that he completely understands and is unaware of the workings of many technology companies. Buffett is able to identify low-priced value in a company by examining these variables. Buffett's top holdings. Stocks that Buffett believes are wise investments are listed by his public holding company, Berkshire Hathaway, and include Apple, Bank of America, American Express, Chevron, Coca-Cola, Kraft Heinz, and Occidental Petroleum. Additionally, he has sizable shares in privately held businesses, including GEICO Insurance and Burlington Northern Santa Fe Railroad. Warren Buffett came from a very wealthy background, but he is a self-made man. After running a stock brokerage business, his father was elected to the U.S. Congress. Buffett was able to enroll in esteemed universities like Columbia University as a result. However, he did find his own business and make his investments, which ultimately brought him great wealth. The 7 secrets behind Buffett's billions. He reads a lot. He's methodical in his approach. He's not an overnight success. He relies on the numbers. He's a master of influence. He's persistent. He lives below his means and invests. Giving back and philanthropy. Buffett, despite his wealth, maintains a simple lifestyle and is economical, driving a small car and living in his 1950s house. He pledges to donate most of his wealth to nonprofit organizations like the Bill and Melinda Gates Foundation. In summary, many elements contributed to Warren Buffett's success, including his early exposure to value investing, his methodical approach to investing, and his emphasis on quality rather than quantity. Buffett has amassed a fortune that will be remembered for many decades to come, thanks to his long-term outlook, patience, and dedication to charity. We may all get important insights about how to attain long-term financial success and positively impact society by examining Buffett's methods and beliefs. Thank you for watching, and please return soon for more behind-the-scenes looks at the lives of accomplished people.